all these indicators that you guys are relying on to see a breakthrough in your trading is it's absolutely ridiculous. Indicators are great. I've tested a lot of them, but a lot of them don't work. But there are a couple of indicators that I would love to show you guys. They work pretty decently, but more so, I'm reliant on price action and how the market is actually trending and forming. I want to show you guys these couple of indicators that I have been using that you guys may like as well. I don't know, maybe. But before we do that, if you guys want to get my one-on-one mentorship, I have one-on-one mentorship, guys, if you didn't know. And all you have to do is click the link in my description, book a phone call with me, fill out the survey, and then we'll get on a phone call and we'll see ideally if you would want to be a good fit or if you would be a good fit and you would want to take action. Now, without further ado, let's get into this video. All right, guys, I'm going to start off with a couple of indicators that I like. One is the RSI plus. This isn't the regular RSI. We use this for divergence. This works best on the minute 15 and the hour 1. And what I'm looking for is a double top and a double bottom. This works absolutely phenomenal. Okay, so we can see, this would be valid. We can see right here, we have this double top right here. We have this left side. We have the right side of the double top. Notice how, not what I want. Notice how where the candles closed, they're lower than where the candles closed right here. What we're looking is how the candles are closing. We pushed higher right here versus than we did right here. So ideally, at this point in time, if we were to replay it back, price is looking to take off. Wait one more candle. And then we could see right here on the divergence. So look at this RSI. Let's pull this up. It's showing us a willingness to go higher. Traders are like, oh, it's going to push up. It just broke this high right here. We're going up. So ideally, price on the trend line, it's going up. It's pushing up. But then on the divergence, look how we have this high. This high right here and this high. Notice how this high right here on the RSI plus is in alignment with this high. So it's saying it's going high and then higher, but then on the RSI it's going high, but then it's going down, then it's not going as high. So I like to think of the charts as not being as accurate all the time. It's like a pretty girl walking down the street, but this girl is freaking evil and she will destroy your heart if she gets a chance. Same thing with these markets. They can be very evil. So I can see that we have this high. So ideally, we could be like, you know what? I don't think this is going to go up anymore. I think it's going to be a good short. Let's ride it down here to this low. Have our stops up here. And this is our setup. Boom, TP hit. So this is how we identify divergence. And let me show you guys like one or two more examples so you guys can get a better idea. Okay. Minute 15. So all I'm looking for is like a higher high and then another higher low and a lower low. Or sorry, a double top and a double bottom. I'm confused right now, guys. This wouldn't be it. Usually when I'm looking for a double bottom, I want to see the double bottom, the hit to it. But then the double bottom, the other side of it, I want it to see go deeper than this one. This one went deeper than this one. So I want to see it to go deep, but the second time, the second hit on the double top or double bottom, to go deeper or higher than the previous one. Okay. And this isn't going to form like all the time, guys. Okay, this is another prime example. Let's pull this up. So we have price right here. It's going higher. It's showing us a willingness to go higher. We have this high, and we have this high. A double top, realistically a triple top right here. But then we have it. It's pushing up. This is going higher. It's closing higher than it did right here. But then look at the RSI plus. We have this high, and we have this one. Yeah, it's barely going lower, but still the data is telling us right here. So you can see we have the divergence. It's wanting to push higher, but we have that bearish engulfing seller telling us to go short. And then we could see right here, it's going lower right here than it did right here. And overall, it started to fall down over time. This would have been a long trade, but still it would have played out. If you had your stops like this, stops up here, it would have never hit it. Absolutely perfect. Okay? Let's go and find another example for you guys. Double top, double bottom. This one wouldn't be too accurate. Okay, it looks like we can't see too many at this point in time. Like I said, guys, it's a hit or miss. It's not going to happen all the time. Here's one we can ideally see, kind of see. Overall, it's going lower right here. But then on the RSI Plus, you can see with this low to this one, it's barely starting to push up. So obviously, the steeper the incline on the RSI Plus, that's what we want to be looking for this indicator. And when I'm showing you guys all these indicators, I would expect you to go and kind of back test these and see if you see what I see. Ideally, this is what we want to be looking for. It's pushing higher on the chart, but then lower on the RSI Plus. That's for a double top. Okay? Next indicator. Let's delete this. We don't need it. Next one is... Where's that? Bollinger Bands right here. I actually really like this indicator. I used to use it all the time. So the way that we use it, it's very simple. When you see the candles that are hitting the low or hitting the outside of the Bollinger Bands right here, this band, that's signaling that it's oversold and it's going to push up. When you see it hitting the top of the Bollinger Bands right here, that's signaling that it's going to be a good sell. Now, can you guys see how the Bollinger Bands are super squeezed together right here, and then they just go out of nowhere, they expand like that? That's because we have all this volatility in the market that expands the Bollinger Bands. So when we're looking to short it or buy it, we want to be getting into it when the Bollinger Bands are spread like this, or wide open. Okay? So right here would be a good buy. Then right here would be a good sell. When you see the candles closing outside of the Bollinger Bands like this, or wicking it, ooh, that's signaling a really good trade. One thing too, you kind of want to get into the markets. You can see how tight the Bollinger Bands were all throughout right here. And then they started to zip away. Look at how they opened up right here. When you see them opening up like that, that's signaling that there's going to be a really big push, or a lot of volatility is going to enter the market soon. This indicator is pretty cool. I used to use it a lot. Don't use it too much anymore. Overall, I would give it like a 6 out of 10 for the indicators. Not too cool. This is like a really cool example. We can see how small the candles were right here. And then look how they just start to expand. Boom, they open up. So we could see a big move is happening, and then boom, it drops. Comes up, comes down, hits the high of the Bollinger Bands, comes in here, hits the high again, pushes down. Go through and kind of look at these indicators and let me know what you guys think. Like I said, I don't rely on indicators too much in my trading anymore. Like, they're cool to use, but it's not something like, oh my gosh, like, we gotta have these. No. Last indicator that's super, super basic, but is honestly probably the best indicator, is those stochastics, and this is also works with the RSI. So if we have our levels right here, we have the 80% on this dotted line, then we have the 20%. What I like to do is get the horizontal line and put it right here so it's more clear. Make this yellow. Boom. Then get the horizontal line right here. Make it yellow. Perfect. Whenever we're over the 80%, that's signaling a sell. When we're under the 20%, that's signaling a buy. But one thing that you need to look for is when it's over the 80 like this, you want to wait for that line on the bottom to cross over the top line, that blue line. So we want to see the orange line cross over the blue line. And vice versa, if it's going to go up, we can see right before it pushed up right here, Notice how that blue line crossed under the blue line, under the orange line. So let's go and look for a better example right before a really nice drop. Okay, so we can see that's overbought right here. Orange line, or the, what is that? Yep, the orange line crosses over the blue line right here, over the 80%, signaling a short. So ideally the short was giving us, we were getting confirmation on the RSI right here. This is where we're getting the orange line. Look how the orange line crossed over the blue line right here. Once we saw that happen, boom, let's freaking look for a short. We're shorting this thing. Have our stops up here just to be safe. Ride this thing down here. Play it back. Profit. TP hit. Right here on this candle. So I want you guys to go through. Let me know out of these 3 indicators, which one is your favorite. I personally favor the stochastics. They're just simple to understand, simple to use. And these do work pretty well on higher time frames, like the hour 1 and hour 4. The stochastics do amazing. So back test these indicators. Let me know what you guys think. And I will see you guys in the next video. Peace out.